Hi, this is Nick Katko from BMA, along with my esteemed colleague.
Good morning, I'm Mike DeLuca.
And we're here for our monthly Practicing Lean Accounting webinar series. Today we're going to be talking about using lean measurements in lean accounting. So first, some administrative things. I need to find my mouse. I want to make sure that you can see us, hear us, and also see the screen. So please, in the question pane, just type yes, any of you, so we can take care of that. Okay, looks good. If you would like to get a copy of today's presentations, it's in the handout section of your control panel. If you are viewing this via recording and would like a copy of the handout, please contact me and I'll be glad to send it to you. And also, we're going to try to wrap this webinar up so we can answer any questions at the end. So please put them in the question pane and we'll get to as many as we can at the end of the session. And as always, for those of you who are repeat attendees, if you want continuing education credits and you're a certified public accountant, please answer the 3 attendance check questions. You have to stay logged in for 50 minutes. You have to obviously attend the live event, and be glad to send your certificate. If you are not a certified public accountant, but yet you would still like some a certificate of attendance, also be glad to send that to you. So where are we on the Practicing Lean Accounting series? We've identified 7 primary practices. There are 4 foundational practices: understanding value, identifying waste, using lean measures, and using PDCA. And those foundational practices are then employed to both improve accounting and develop lean financial management practices in your companies. And then the sustaining practice is lean financial leadership. And so we're finishing up the foundational practices today about measurements, and then future webinars are going to be focused more on improving accounting, lean financial management, and lean financial leadership. And for those of you who may be new, this Practicing Lean Accounting is the title of the new book that Mike and I are working furiously to finish up. We hope to have a final version sent to a book designer in the next few weeks, and right now we're looking at a tentative publication date, maybe in August or September. We will definitely start making announcements once that's more firmed up. So today what we're going to be talking about is what the difference between traditional metrics and lean measurements are. We're going to describe what are the relevant lean measurements, and we're going to actually give you examples in different types of industries. Then we're going to be talking more about the deployment and usage of these measures, which is team ownership, visual display, and problem solving. And then we will wrap up and take some questions. So, what do we want you to get out of this webinar today? In terms of using lean performance measurements, Uh, they are applicable in all accounting processes. And really the proper combination of measurements, these relevant measures that we're going to talk about, they really tie together understanding customer value and being able to identify waste. And in terms of PDCA or improvement, they also measure improvement. They also reveal problems. So, lean is very much a data-driven strategy and culture. It's not just a bunch of words or a bunch of tools and practices. It's about understanding the numbers, and that's what lean measurements do. When it comes to lean financial management, what lean measures do for accounting and in lean accounting is they help understand the actual relationships between lean operating performance and financial outcomes. This is always in any organization, any organization, accounting has this fiduciary role to be objective and fact-based and be able to perform analysis that are reliable and useful. And so in the world of accounting, understanding lean operating performance measures and how they work and what they reveal, it helps tie lean operating performance to financial performance, and it really does help accounting do a better job of being able to explain the financial results. And in financial leadership, accounting has this responsibility and duty along with like information technology and even other parts of the organization to ensure the integrity, transparency, and reliability of a company's measurement system. Okay, we need to know how this data is produced. What is the standard for each data? The idea of data governance. Okay, so again, the changes in the information requirements and the data requirements inside a lean organization, accounting plays a very strong role in maintaining good policies, good governance practices on that information. So, what's the current state of what we like to call traditional metrics? First of all, there's in most companies, I'm generalizing here, there's probably too many measures. These days with the software systems that are being used in companies, it's possible to measure anything. Okay, and whether and even just extracting data and putting it into spreadsheets. So the possibilities are endless. But in general, you have too many measures. Second, the primary use of traditional metrics is for reporting purposes. We produce the measures and they're just reported, they're used. They're just reported inside the company. Doesn't mean they're ever being used, but they're reported. Another characteristic of traditional measures is that they're focused on financial outcomes, or they're sort of financially based. And the final characteristic of most traditional metrics is that they're top down. A lot of measures are reported up higher in the organization because the leaders in the organization or managers want this information, so it's reported up. The managers form judgments and opinions on the measures, and they sometimes even dictate actions. So it's sort of like everything flows to the top, and then the marching orders come down. So this is, again, the system that is present in many, many companies. when a company commits to a lean thinking strategy, a lot of things change. And the migration is to go from a traditional metric system to what we call a lean performance measurement system. So what are the pieces of it? One, what are the relevant lean measures? What a lean performance measurement system does, it creates ownership. So whatever part of the business is being measured, whatever process or cell or value stream, that there's a team of people that own that measure. We're going to talk about this in a little more detail. Measures are displayed visually, ideally on performance boards. When in visual, we don't necessarily mean electronic, but that's sometimes unavoidable. But we want sort of these measures to be on a board, tangible, and it's been proven that the ability that when people have to maintain a board and write the numbers down every day or graph the numbers every day, that helps create ownership, and it creates visibility of overall performance. And finally, the primary purpose of a lean performance measurement system is to understand problems and issues and understand problems and issues and drive improvement. So what we're going to be talking about the rest of the webinar is we're going to talk about each of these four pieces of a lean performance measurement system. So the first thing we need to do before we move into that is to do our first attendance check. So I'm going to launch it, and it's very, very quick. So just let everybody respond, and then we'll move on. All right, everyone did a good job there. I'm going to close the poll. I'm not going to share the results. Well, I clicked on the wrong button there. Okay, so I'm gonna turn it over to Mike, and he's going to lead the discussion on relevant lean performance measurements.
Great, thanks very much. And I'll let folks know I may drop my video off. I'm working in a site today that doesn't have particularly good internet connection. So if it seems like it's getting choppy, I may just turn my video off so that the spoken part isn't choppy. Like you were talking about, Nick, one of the really important things to think about when we're talking about all of these types of relevant lean performance measures is the rationale behind adopting this thinking. And the rationale, like you talked about, Nick, was we need to be able to use these measures for the organization to continually improve its performance and its results. So let's get into some of these categories of how we can think additionally or differently about measures so that the company can continue to get better results from the lean strategy. We'd like to talk about 7 categories. Those of you who have some experience in lean, you'll recognize many of these, and I think it's important to talk about these from the perspective both of 3 perspectives, really. The perspective of how do these measures help us understand what the company's end customer is benefiting from, how our performance is improving relative to them, how it's helping the company get better results. Those might be financial results or other strategic performance results like growth, and then how our measures help us get insight into how the company's employees are experiencing the work and being set up for success. So we'll talk about each of these a little bit more clearly, so why don't we just go ahead and go into delivery, the first category. when we want to think about delivery, it's really from the customer's perspective, what does timeliness look like? And whether you're producing a product or a service, these measures can be somewhat different. So in manufacturing, it might be a measure of how many orders have we shipped on time relative to total orders shipped. From a service delivery perspective, it could be a similar thing from the perspective of, you know, I promised car repair on a certain time, on a certain date, or you know, I promised a diagnostic on a computer system in a company by a certain time, and were those completed on time? In our work in accounting, we have timeliness associated with much of the work that we do, whether it's paying invoices on time or delivering reports or analyses on time or filing reports on time. And so we can look at the timeliness of that. Healthcare, another type of service industry, we have to think about from the perspective of the customer. Do they have timely access to services? If I need to get in to see the doctor today, can I? And how many patient services are delivered on time? And so one of the things that's important as we think about measurement, we can go on to the next category, is one of the things that our measures help us do, to Nick's point earlier, is to really consider if we're not performing to our standard or to our target. It really, the benefit is it helps us do problem solving, and in many cases helps us get insights into performance before it's too late to impact the outcome. So let's talk about quality as well as delivery. Again, from the customer's perspective, am I getting the right product or the right service done without any rework, without having to go back and forth? So that would be getting a manufactured product that is delivered to me completely correct. Also, from the perspective of the customer, if I get a product that has issues with it, that's one thing. However, the company may go through a number of rework cycles in producing the product to ensure that I get one that doesn't have any issues. And in that case, as a customer, I would never notice a defect or a problem, but the company's going through a lot of what I would call rework loops in order to do that. So we look at defective products as a percentage of total products produced, but that's not just at the end of the production cycle. That's, do we have rework loops during the production cycle? Similarly, in the service industry, how many services have we provided without having to do rework? Let's think about things like software implementation. You're implementing software in a large company, a software package that your company manages. How often does that implementation of that software package go through from A to Z without a hitch, right? That's what we're looking for, because that impacts both the company and the company's customer. From accounting's perspective and the work that we do, how many times do we have to correct issues because they weren't done, or there were some issues, missing information or incorrect information the first time? And an example of that might be correcting journal entries. Why are we doing correcting journal entries? Similarly, in healthcare is another industry example. A problem from the quality perspective is if someone has a hospital stay and they end up with a hospital-acquired infection, which is an important quality measure that many hospitals, or most hospitals, are working to reduce. So that's an
Mike,
an example of defects. Am I getting, as the end customer, the correct product without any rework that I experience as the customer, that the company does? Nick?
Yeah, I just wanted to add a couple things. Number one is, when it's in service industries and even in accounting, it's very important to really define what a defect is, and obviously from the customer's viewpoint is best, because within service and accounting, it's sort of easy to fix the defect and not consider it a defect. Okay, manufacturing, if you're talking about the form, the ability of a product to do what it's intended to do, that's sort of a yes or no answer. It works or it doesn't work. So it's important to really define defects and begin measuring them, because the tendency is just to fix them.
Right. We're used to that as part of our natural work processes.
Yeah.
Whether it's manufacturing or accounting, we're used to encountering problems and fixing them. So lead time, another really important one. And we're gonna think about lead time from the perspective of from the time that I say that I want something, that could be ordering a product, to requesting that a service be delivered, to the time that I either get delivery of that product or the service is complete. So how long does that take? And from the customer's perspective, does that meet my requirements? If I order a product and I'd like it soon, and it takes 8 months to deliver it, then there may be an issue with lead time. I might look to go somewhere else. On the flip side of that, if you as an organization have an advantage in delivering products or services with shorter lead times than some of the other companies in your market or industry, that may be part of your competitive advantage. So from manufacturing, like I said, let's look at how much time it takes us to complete an order. The important thing as we think about lean measurement is not, and maybe you already do this, right? Maybe this isn't a big revelation that we should look at average time to complete an order, but I think the lean thinking behind this is if it does take 8 months, then we get underneath that and say, what makes up that 8 months? How much of that time is waiting in the process where nothing is happening versus how much of that time is spent correcting or reworking issues that were problematic versus how much of that time is, you can come up with any number of examples. So the lean thinking underneath this measure, which many of you may use, is how do we understand why? Why is it taking as long as it does? And what would it take to make it, half as long? What would it take to really delight the customer? So again, service industry, how long does it take to do that software implementation or consult on that computer hardware issue? How long does it take us in accounting to close the month? Nick and I have worked with a number of companies that take weeks and weeks to close the month and have done some significant work to cut that far less than in half. In healthcare, what's the average length of a patient stay that is a safe length, so that the patient is moving through their hospital stay, but not staying longer simply because they're waiting for something from the doctor who's been delayed, right? Or how long does it take if I've been referred for some kind of a procedure? How long does it take me to actually get that? Is it 3 months? Is it 3 days? Relative to how important that is. Let's go on to the next one.
Yeah,
What would you add, Nick?
Well, lead time is one of my sort of favorite measures. One reason is, lead time is the value added time plus the non-value added time. So through improvement, you reduce the non-value added time and you naturally create capabilities of being faster. And it doesn't mean that, you want to meet your customer's lead time, whatever that may be, but you always want to know that you can be faster than the customer wants. Just a really quick story. I worked with a software company a few years ago, and on their customer support tickets, okay, the goal was to resolve every support ticket in 3 days, and it was interesting because it was much greater than 3 days, and the team got it down very quickly to about 6 or 7 days because some of the waste was just obvious, and then it got very, very difficult to get to 3. But one thing I explained to the team is that you're promising 3 days, but you need to be faster than 3 days because you got to give yourself some slack. And so we set an internal target of actually 2 days. That way they knew pretty much that they could meet the customer promise date of 3 days. The great part about lead time is that the lead time of any process can be measured. We have some examples here. I mean, you could measure lead times in human resources and in marketing and things like that.
So one of the things you're raising up as we move on to productivity is the lean thinking behind measurement. And it's not simply that we want to learn, that we want to use these measures, but Nick, to your point, how do we understand what the customer needs? So in thinking about measures, we're not measuring, like Nick said, the current state of reporting of measurement in many organizations is to simply report the information. What's important for us in lean thinking about measurement is to set a target, and not just to set any target, but set a target that's based on the customer requirement. And another example, I was working with an internal contracting team, and we talked about, well, what should the target be for delivering a contract once you get the request? This is contracting with vendors and things like that. And the team said, well, we can do it in 14 days. Okay, so my comment back was, well, the folks who are requesting the contracts, who want to engage a vendor, how quickly do they need it? Well, and the initial answer was, that doesn't matter. We can do it in 14 days. So I encourage you to think not just about, yeah, these are measures that you may have been thinking about, or may be using, or may spark some thinking about measures you want to add. But part of using the lean thinking, bringing the lean thinking in, is setting a target that doesn't necessarily reflect what you're capable of doing now, but what you need to be capable of. So let's talk about productivity, manufacturing, sales, relative to the hours worked or number of employees. So for each unit of people resource, which is the most important resource that we have in our organizations, what is the dollars of sales that are produced? I mean, the same thing for manufacturing or service. There are other ways to look at that as well. In accounting, we could look at how much of my time do I spend correcting issues versus doing work that is done first time correctly, and then how, for healthcare, for example, how many hours worked per patient day. But again, to Nick's point earlier, when you talked about lead time, you talked about it being value added plus non-value added time. So we're looking at time, we're looking at the output of something relative to our resource. And what we're doing is not saying, gee, folks should be working harder. That's never the point. The point is, how can we identify what is going into the current measure so that we understand what would it take to allow that person to be more productive. So simply, if you were to take, whether it's someone on an assembly line in a car manufacturing plant or a nurse in a hospital unit, and you were to follow them for a day and just take notes on how much of their time was actually spent either moving the car forward on the line or advancing the patient's care versus doing all of the other stuff that they do. Right? You might have a hypothesis that they spend the majority of their time either advancing the production of the car or advancing the care of the patient, and you might be surprised. So it's important for us to look at productivity, again, not because we're trying to get people to work harder, but because we're trying to understand what is limiting productivity and what's getting in the way of the employee. Nick, anything to add on that?
No, that was all very well said. Productivity is really shows improvement over time. Okay.
Mm-hmm.
We're serving customers better, so we're being more productive. And again, the less waste you have in a process, the more time you have to serve your customers better.
Great. Yeah, absolutely. Cost, and we're looking for reduction over time. So Nick and I say, pretty much every time cost comes up, that lean is not a cost reduction strategy. Lean is a strategic approach to it, or lean is not a cost reduction methodology, right? Lean is a strategic approach to learning and improvement over time, focused on your company's customer, and the benefits that you get as a result of that continuous improvement of what you're delivering to your customer is you do find that costs go down over time. So we should experience that. We should not be shy about saying we're looking for cost reductions, but that's not the point. We're looking to experience cost reductions as a result of making the work easier to do correctly the first time and getting the customer what they need more effectively. So we can look at manufacturing as cost as a percent of sales. As you're creating capacity, as you're making the work more streamlined and effective for employees to do, you're going to create capacity so that they can take on more business. As your business is growing, you're going to find, ideally, one of the outputs of the lean strategy is that your costs as a percentage of sales are going down because your sales are increasing, but you're basically, other than your raw input materials or any of the raw materials you're using in service industries, including healthcare, those are the only truly variable elements, and you're making the best use of your people resource and able to grow the business relative to your costs. So cost as a percentage of sales, average actual cost per service. When we're in accounting, we're looking at how many payments are we making late relative to total payments. That's one example. How many times were we able to, so that might incur a fee. How many times were we able to make a payment and take advantage of an early payment discount? So there are a number of things that we can look at in terms of accounting. Also is, and this is a financial outcome, but it's more on the revenue side and not on the expense side. If we're more effective at collecting payments from customers when they're billed up front, then we'll have fewer accounts that might go into collections and never get collected. So that's another example.
Yeah, if there's one of the areas of lean performance measures that have a lot of traditional metrics, I would say it's cost.
Mm-hmm.
You know, you can slice and dice and analyze costs in many different ways, and there's a whole lot of interest in any company in controlling costs. So what's really important here to understand is what are good lean performance measures regarding cost. And like Mike said, you know, lean thinking is not a methodology to cut costs. And so, you know, you're going to get what you measure. So measure costs the right way in the context of lean thinking, and you'll see the results over time. It's, you know, and also a lot of the traditional cost metrics are very short-term in nature, and we want to get away from that.
Mm-hmm.
And this is one area where, especially if you're in accounting and finance, that, you know, you personally or the accounting team may have to adjust its thinking a little bit. Take a critical look at what you use as cost measures today, because again, measures are supposed to reveal problems and issues.
Mm-hmm.
And the final point I want to make is that costs are an outcome of operating behavior and operating practices. So it's hard to look at any cost and understand what's going on. So, you know, just be very, very aware of, you know, what good cost measures are in lean accounting.
Right, because they're an opportunity for us to learn what can be improved. Yeah. Right, good. Safety, and we can look at things like incidents per person. So let's think about safety, which is, you know, I would not suggest that safety is not being measured even in traditional measurement systems in any of these types of industries, whether it's looking at incidents and near misses, you know, reportable harm, incidents per patients in healthcare, like patient falls, repetitive motion, eye strain in services like accounting. I think, again, to Nick's point, we're measuring them, but what can we learn from the measure? And many times what we have to think about in good lean measures is if our traditional measure is what I would call the rear view mirror measure, like you know, the incident has already happened, right? The patient already fell, the employee was already injured in the workplace, that it's already happened. What I encourage you to think about, and this is a really important category to talk about it in, but it applies to all of the categories, is what can you measure that helps you look at the prevention of those incidents and the effectiveness of the prevention, as opposed to just tracking them once they've already happened. And so think about the example in here is, how would you look at near misses? And is that, are those reportable? Do folks just sort of brush off a near miss and say, oh, good, that didn't turn into anything worse? Or is that reported in your organization as an opportunity to learn? Great, no one was hurt, nothing, or no one was harmed, but why was it a near miss? Can we use that as a measure for how we can improve our preventive activities? So think about, in all of these, how you can use your lean thinking around measurement to get ahead of the outcome before it's a done deal, by looking at something that is more predictive or more upstream. And morale, respect for people, which is one of the kind of the core thinking, the core elements of lean, continuing to improve customer value and modeling respect for people. That people like Nick and I have said just today and many, many times are our most important resource, our most valuable resource. So how can we look at different ways of thinking about how that's actually showing up in a measurable fashion? We can look at engagement, and we can look at engagement lots of ways. Certainly most companies, or many companies, have employee engagement surveys. They do them annually, they do them quarterly, they have monthly questionnaires that go out. But let's look also at how are we engaging employees in continuous improvement. So for example, on my team, as we were improving the work and creating some capacity, we refocused some of that capacity, the time that we had created in the work week, on a couple of things. Do we have time dedicated for continuous improvement activities? And do we have time dedicated for professional advancement, for learning and education? So look at things like that. Look at measuring progress and developing new skills. Make that visible. How many training hours per person are folks getting over the course of the year? And then things that are really relevant for both for their professional development and for the company. And if you have a daily huddle or a daily stand-up meeting, you can do a quick check on people, whether or not people felt set up for success that day. And then if whether folks do or don't, ask them why, so that you can continue the things that are working well, and begin to organize and again collect data around the things that aren't going well, and use that for problem solving.
Yeah, I think this is a very often overlooked lean performance measurement for a couple reasons. Number one, like Mike said, a lot of companies do employee surveys, and they think that that's measuring respect for people, when in fact the feedback loop from a survey is long. You take the survey, you get the results. Who knows if the employees are ever engaged in explaining why they answered, but then that creates a little bit of fear in employees, because if they say things in the survey, then they might get pointed out. So, surveys serve a purpose, but it's not really a performance measurement. And so, how can you get the pulse of the people? That's really the key. Okay. And like we said, lean performance measurements are more real time, so that you can learn and then make adjustments. And Mike's example of just doing the daily check with the team and saying, hey, how do you feel about today, is a way. And what we're trying to do is really model respect for people. People are not machines, they are people. And they have ambitions, they have career goals, they want to do a good job, but people get stressed, and they have good days and bad days, or things go sideways at work. And so we just want to always take the pulse. So again, simple, easy measure. Doesn't have to be some large program that's shared by everybody, but especially locally between a manager and their team. How can we get the pulse? So I think, if I'm correct, that takes us to attendance check number 2. So let me start that. And I'll launch the poll. All right, just need a few more people to vote, and then we'll close it. All righty, thank you for participating. And now we'll continue to move on. We're going to talk now about more about the using of the performance measurements in terms of ownership and visual display, and give you some perspective on that. So the first thing about ownership, and this is really, really important. You know, the whatever process is being measured, the team that runs that is in that process, they own the measure. What does this mean? It's self-monitoring. They monitor the measure themselves. It's not like it's being measured someplace else and given to them. They also self-report the measure. I mentioned this earlier about, writing the measure on a visual board, and it's their job to report. So lean performance measures, for the most part, are not given to people. Say, here's your measure for today. Now, in some cases with system reports, that might be possible, that may be necessary, but for the most part, self-monitor, self-report. Using the measures in daily huddles or stand-up meetings, or weekly meetings or monthly meetings, whatever your cycle of team meetings are, that's where the measures are used. The measures are discussed. Learning goes on in the team-based environment. What are the what does the measure reveal to us? What are the root causes? What can we do to mitigate the factors which are driving the measure, for example, in the wrong direction? On the flip side, if the measures are good, we want to know the same thing. What are the reasons why the measure is performing better than expected? How can we sustain that? That's just as important as the negative side. Because ultimately what we want to see is the measures move in the right direction. If you have a daily measure and, for example, schedule attainment, we want to try to hit that schedule every day. If you're looking at some kind of productivity measure, we want to see productivity improve over time. So make sure that there's ownership, and we're not really talking much about this in this webinar, but developing the lean, if you develop the lean performance measures in a cross-functional team-based environment, that's the first step to create ownership. What you don't want to do is have a few people go out there, create these measures, and then basically tell the whole organization, here's the measures that you need to use. They may not understand them, they may not feel they own them, and they think that they just have to report them. So that's one factor in terms of ownership. The other factor in terms of ownership is the frequency of measuring. Okay, we've talked about lean in terms of problem solving. So whatever part of the organization is being measured, make sure it's at the right frequency. I'm going to start from right and move to the left. So if you're looking at measuring and understanding process performance, you might have a daily measure, or it's possible that it could be more frequently and be hourly. It's all about maintaining process control and meeting standards of performance or production. And when I say production, I don't mean just manufacturing. I mean, accounts payable has to meet certain production rates in terms of processing invoices every day, for example. So that's the purpose of a daily or an hourly measure, because we need to recognize an abnormal condition fast and make the adjustment fast to get back on track. If you look at looking at improvement, okay, that could be more at the total, like a value stream level. You can look at that at a weekly basis, maybe even monthly. So this is where we're looking at, are we reducing lead times over time? Are we improving productivity over time? And maybe are we reducing costs over time? On the monthly side, these are more strategic measures. These are strategic in nature, usually used by the leaders of the company, maybe the leaders of a site. And it's really about assessing the initiatives and looking at lean from a strategic standpoint. Again, we're trying to the leaders are trying, do we need to adjust? It's sort of like, do we need to turn the ship a little bit? We're not trying to make the ship go faster at this point. We're just trying to navigate a little bit. So when you're looking at measures, make sure that you have the right frequency at the right part of the organization. And, the more strategic in nature, the more monthly the measure is, the more sort of production oriented, the more it can be daily or hourly. We mentioned earlier, lean measures inform problem solving. What I like to say is that this is sort of like the acid test of whether a lean measure is good. If it is giving insight into problems and issues, and teams are solving problems, it is a good measure. But if teams are not using it in that way, it's probably a sign that you may need to adjust the measure. If you think about the improvement cycle, plan, do, check, adjust, it's the scientific method. And, if you think about a scientist doing an experiment, it's all about the data. So in the plan stage, the performance measures quantify the extent of the problem. So, okay, so we have a defect problem. What's the extent of the problem? Well, our defect rate is 47%. All right, now we have a number that we can put on it. Measures also quantify the level of improvement we're seeking. So we have a defect rate of 47%. We want to reduce that defect rate down to 25% in 2 months. Okay, we have numbers now. We have a direction. Then you conduct the experiment. You put in the improvements, or you try out different solutions. How do you know what solutions work and what don't? You have to measure. So continuing that analogy, all right, we have a 47% defect rate. We put some improvements in place. What's the new defect rate? All right, it's 28%. All right, we wanted 25%, we got 28%. So, what was the effectiveness of the improvement? Well, it did reduce. We didn't hit our target, but you know what? We came pretty close. It's all very objective. And then you use measurements to understand if your improvements are being sustained. So continuing with this defect analogy, all right, our improvement event got us to 27%. So if you were measuring defects on a daily basis, you should be at 25% or better. If all of a sudden it's going back up to 40% on a consistent basis, well, that's an indication that something's wrong. So again, the measures tell you what's right or what's going well and what's going poorly. The final step, or the final characteristic of a performance measurement system, is visual display. All right. This is an example of an improvement measurement board. You can see we have at the top, we have the general plan of a current state value stream map and a series of improvements over time. You can see the specific improvements below that are in process. You can look at the Pareto, which are the root causes of what the problems and issues are. And then at the bottom, you see the measures. So that's, this is a little more complicated, but you could also have simple boards. So here, we don't really even have numbers. We have our measures, safety, quality, delivery, and cost, and we're looking at it at each on a daily basis, and pretty simple. Green, we had a good day, red, we had a poor day, and most importantly, if there was a poor day, below that, this team wrote down, what were the causes of poor performance. And so then you can do some trend analysis to see how things are going. Here's the thing about a visual display. I always call it, it needs to be a storyboard. Simple and easy for anyone to come up and sort of read and understand. Not that on their own. That's sort of the acid test of a good visual board. I can go up there, I can read it, I can get a general idea of performance without a lot of help from the team. I don't need somebody to interpret the board for me. I can see it. So again, simple is better, but make it visual, and it creates a whole lot of visibility for the process, for the team, and for everyone in the organization. So let's do attendance check 3, and then we're going to wrap things up. Alrighty, thanks for doing that. So I'm going to turn it back over to Mike. He's going to do the wrap up, and I'm going to be looking at the questions and seeing how many we have. Go ahead, Mike.
Great. We've talked about many of these concepts through the course of the webinar. We're looking to make sure that we're using more real-time measures so that we can have a beneficial impact on the outcome before it's a done deal. We're looking for, in many cases, the financial measures are the outcomes of the operational activities, and that goes for everything from service, manufacturing, but also as we think about what we do in accounting. So our measures tend to become more operational. And the use of those is, in addition to the importance of reporting, we're asking how are we using this? Can we make a decision? Can we make an improvement? Is this the right measure to inform that? And are the users of the measures the folks who are actually doing the work that we're measuring, right? Is it informing team-based problem solving? And is it allowing us to to improve operating performance? And also, do we have what my teachers always, my lean coaches always called, let's use the thin edge of the wedge. That's the part that keeps the door open, right? We don't want 40 measures. We want 4.
Lost you a little bit, Mike.
5 to 7 lean focused measures helps the team focus on the right thing. So Nick, go ahead and shift. We've got some time left.
So Mike's having a little problem with the sound. I'll just continue here. So, here's some practical advice. Do an assessment. Understand, what measures are being used today to understand operating performance. What measures are being used in accounting to understand performance, and sort of, take what you have today and do a gap analysis. I mean, what's missing? Okay, we've seen cases where there are some current measurements that qualify as lean performance measurements. That's great. And then after you do that, begin piloting the new measures in accounting and operations. You try them out. Remember, people have to learn how to use the new measures, okay? And it takes some time. If you're looking at a daily measure, it probably takes about 30 days for people to get used to it. If you're looking at a weekly measure, you might need 4 to 6 weeks for people to get used to it, okay? So again, it's a learning process. And remember, if it's revealing problems and helping people solve problems, it's a good measure. And we just wanted to, make this offer. If you wanted to do your own assessment and you wanted us to review with you for free for an hour your gaps, we'd be glad to do it. Just contact us and we'll help you out. All right. So let's see. Final reminders. Complete the survey that you'll get. It's like 6 questions now, not 5. And if you'd like CPE credit, contact me and I'll be sending you a certificate in a few days. Here's some events. Coming up beginning next week is our Solving the Standard Costing Problem online workshop. Contact me if you want to register, or just go to our website to learn more information. We're going to continue our webinar series the second Wednesday of each month. Topics will be announced soon, beginning for the second half of the year. And don't forget the Lean Accounting Community Chat, which is the third Wednesday of every month. And that's the link to register. You register once and you can attend all of them. So we have some time for a few questions. Christy asked, how do you define a defective product? She also went on to ask, do you consider an incompleted item produced due to one component delayed and requires rework to complete it? Yeah, a defect is, in terms of a product, a defect is that you cannot use the product for its intended use. That's sort of like at the customer level. Incompleted items produced because one component is delayed could also be considered a defect, and because it requires rework. So yes, you're right on in terms of what a defect is. And what's interesting about quality problems is they usually create rework too. All right. So Michael asked about for employee engagement or respect for people or morale, ideas implemented per person. Yeah, that is a very good measure. Again, what I like about that is it's ideas implemented rather than suggestions. I'm not a big fan of suggestions for improvement. It's all about what people actually do. So that's great, Michael. Christy asked another question about for safety in terms of accounting's preventative care to avoid repetitive motion and eye strain. I don't have any specifics about that. It's that's one of those sort of measures that it's safety, yes, but it's not like what's a near miss or what's an incident. So maybe that's a measure in terms of asking people on a daily basis, did you have any problems physically with eye strain, headaches, repetitive motion? You can figure out a way to. Go ahead, Mike.
Yeah, just one quick suggestion to add to what you're saying, Nick, is that if you've got a process in particular that you're curious about, spend some time shadowing the person doing that process. Identify the opportunities where there might be repetitive motion injuries or strain, and then use your observation of the process to suggest some measures that you might track, whether or not you're able to reduce those opportunities or situations.
Okay, so we're at the top of the hour. Hopefully we answered your questions. If you have any other follow-up questions, please write. Both Mike and myself will be glad to answer your questions. Thanks for attending. Please fill out the survey, and we hope to all see you next month on our regular webinar. So all of you have a good day. Bye-bye.
Thanks, everyone.